The long-term comparison screen shows you the outcome of using the Speed Equity software program and the Speed Equity system. The first row here shows you your primary property loan. In this instance, that loan would have taken 26 years and 6 months and cost a total of $198,621.17 in interest. The second row shows the HELOC credit limit. Now, we're assuming we're utilizing option number 2, where we've got a smaller HELOC in second lien position, and that smaller HELOC is going to be paid off in December of 2016 and cost just over $6,400 in interest. And finally, the third row is the primary property loan with injections. So we've got the smaller HELOC and we're making injections from it into this primary loan, and consequently that loan is now going to take 11 years and 10 months to pay out and cost us just under $86,000 in interest. So the overall outcome in this example of utilizing the Speed Equity system and software program is that there is a time saving of 14 years and 8 months and a total interest saving of $106,240.73. Now, your result that you see is obviously going to be very unique to you based on your income, your expenses, and the size of your mortgage. Now, some of you may be showing a loan term for your primary property loan or your HELOC of 30 plus years, and that'll be showing up in red, and you're wondering what's going on. Well, there's usually two main reasons for that. One, and 99% of the case, it's a data entry error, and secondly, if you're showing that 30 plus years for your home equity line of credit, it may be that there is insufficient funds to make the program workable. And your job then would be to carry out a little bit of detective work to isolate the cause of why it shows 30 plus years. And that's where this particular link comes in, where it says click here to find out why a loan term may exceed 30 plus years. And you'll get this pop-up checklist, and it'll walk you through to make sure that you've entered your data correctly and to do a little bit of investigative work on your own, and you'll be able to isolate why that loan term may be showing as 30 plus years. One of the features available to you in the loan term comparison screen is the ability to create what-if scenarios right here instead of having to go all the way back to the input screens. An example, what if you were to increase or decrease your monthly expenses by a certain amount? What if you were to increase or decrease your monthly income by a certain amount? What if you were to make a lump sum injection of income in a particular month and year? What if you were to take out money for a lump sum expense in a particular month and year? You can enter that information in this screen, and that will give you immediate feedback right here, so you can see whether that particular course of action is desirable for you. And if it is, then what you'll need to do is go back to the input screen and enter that scenario in the appropriate screen to make it a permanent feature of your Speed Equity plan. So that's the loan term comparison screen in a nutshell. It is designed to show you that this is the end goal that you're endeavoring to achieve and that you can achieve by using the Speed Equity software program and the Speed Equity system. So that is the end goal. In order for you to get there, you must have monthly benchmarks to achieve this outcome. So this is like a GPS system now. This shows you this is the end goal, and you need to know how to get there on a month-by-month basis, and that is where the cash flow summary screen comes in that will help you to achieve this outcome.